This is an introduction to the book Mean Reversion Trading using options and technical analysis. The book lays down a strategy that's based on well established concepts of mean reversion. This theory, used in finance, suggests that asset prices will eventually return to the long term mean, or average. This Netflix chart shows what it means. Notice that Netflix is enveloped in these three lines called Bollinger Bands. This technical indicator, also explained in the book, encompasses 95% of the price action of an equity. When an equity approaches a price extreme, either to the upside or downside, the author takes a trade in the opposite direction of the current trend. The goal from this trade is to benefit from the fact that whenever a price is stretched too far away from the mean, it tends to bounce back. The author uses a particular type of an option trade called a debit spread for his entire trading method. The benefit of these types of trades is that they double your money with every winning trade. The underlying stock has to move only $5 in your direction. Sometimes, even a $1 move can achieve the same result. The simplicity of the trade structure is quite amazing, as it cancels out the time decay and IV factors of options, and you don't have to worry about them anymore. The book is divided into three sections. The first part talks about the author's own journey, about how he got started with options, what mistakes he made in his earlier years, how he rectified those mistakes, and how he created a rules based trading system. There are rules for everything, like trade entries, exits, trade management, risk management, etc. Since there are rules laid out for everything, there's no room for any guesswork. Just stick to the rules. Of course, trading is not that easy and does come with a lot of shades of gray. But getting into a good habit by following these rules gives you a great foundation for success. The second part goes into the details of technical analysis and options. The author describes in detail what debit spreads are and how to construct them properly. He also shows you how to use a handful of technical indicators to spot trade setups. This is followed by two chapters which go into example after example of trades demonstrating these ideas. The last part of the book goes into a very important aspect of trading. For example, handling losers. It also goes into painstaking detail on how to avoid portfolio blowouts during market corrections and crashes. Most books on options get too deep into the nitty gritties of option theory and how to construct different types of spread trades. This book, on the other hand, keeps things simple while laying down a comprehensive trading system that's capable of generating outsized returns.